Alright everybody, thanks a lot for joining me as at the close on Tuesday afternoon. First of all, I do hope you had an enjoyable Memorial Day long weekend for those of you who didn't work yesterday. Transitioning, however, through to today's session on the US financial markets, we have seen again reluctance of buyers to show on up, or at least to push us up into these open gaps that are still present on the S&P 500. In fact, what we are doing is that we're coming back down to this 2,800 area. This 2,800 area is important because we have been down here on a number of occasions in the past 3 months or so. All right, here's today's candlestick. This is the candle going back to the 13th of May where we had this little tag down here at, again, roughly 2,800. We then have to rewind as far back as late March when we really started to see, again, the initial breakout above 2,826. This was to the upside. We got the retest of this old resistance as new support prior to the trend continuation that took place for about a month up until, of course, the peak most recently at the beginning of May. Now, what's important about this, as I have repeated on a number of occasions, is that technically at the moment we are at a neckline. And I see a lot of analysts, I see a lot of market commentators, pundits, so to speak, talking about the break of the neckline. And yes, technically that is somewhat correct. However, I do think that they are missing, right, the context of how this pattern and where this pattern is essentially showing up. What I mean by that is, say technically we do get a break below this 2,800 area, or at least we start to crack below the swing low, all right, or at least the higher swing low in the month of March 2019. A lot of analysts and traders alike are going to be calling for the bottom to fall out of the market. They're going to say that, look, the neckline has broken. Look, we're starting to see confirmation that the market is rolling. Look, if we go out on the weekly chart, we're pricing in some form of a triple top or a head and shoulders type of reversal sort of pattern on the S&P 500, not to mention the Dow or even the Nasdaq at this particular juncture. Again, this is the Dow Jones Industrial Average. You can see very similar neckline showing up. This is coming in just shy of 25,500. But I think you get the picture. Again, we were back here on that same day. This is the 13th of May. Then, of course, back in the late period or stage of March, and also a little bit earlier on after when we established this as resistance, and then of course continued back up into that first swing high in the month of February on the Dow Jones Industrial Average. So the narrative, at least, it's going to be, all right, if and when this does happen, it is, first of all, all right, it is going to be temporary. It's not going to be a major market transition. It's not going to be that of a bull to a bear market. And what is most likely going to happen, all right, so I'm just trying to forewarn you, as we have spoken about first when we first hypothesized anyway, the potential of something like this happening either in the late part of March, even in the early part of April, was that if we started to see, technically speaking, a lower low, all right, say for instance the market actually takes out this little swing low over here and it trades down to 2,772, there is a very high probability, I'm just going to draw an arrow moving up or pointing in the upward direction, there is a very high probability that we just get a reaction, all right, it's going to be a whipsaw, it's going to trap a lot of those overly aggressive shorts, okay, right in this critical location. This is what we came up with over the weekend, where X marks the spot, whereby the markets may very well turn on a dime and then continue again in their upward direction. When I go through some of these oscillators, have a look at this. You've got the 100 and 200 more or less directly below where current price action has closed as at Tuesday. If I flip on over into the exponentials, yes, technically we are below them. But when we go into these oscillators, have a look at the RSI. It's already pushing for the second time in the month of May into short-term oversold conditions. We've got the MACD, which very rarely lingers in this negative sort of position as long as we are above, of course, the macro primary bullish trend line. That is exactly what is going on at the moment. In fact, if I can zoom on in, you can see multiple periods of deceleration when it comes to the histogram lines, okay? Even though we're starting to try and push on back down, you're going to see this ultimately probably create divergence, whereby if we do actually push on down and create a lower low in terms of price action, you're going to see this slope up and give you that divergence in terms of the momentum of the move to the downside, which is going to correlate with a higher low on the MACD. So pay attention to that as well. You've got the ADX trying to turn up. The CCI is pretty neutral there at -11. It's not really giving us a reading one direction or another. And we're starting to see, again, price action try and push on back down into this lower Bollinger Band. At least for the time being, it looks as though we are seeing resistance at this simple day 18 period moving average. So again, right now, what you need to be thinking about, number one, is the market. So are the markets going to hold 25,300, give or take, on the industrial average? Is the S&P 500 going to hold 2,800 on its right, respective index, and more or less, is the Nasdaq going to hold anywhere up above 7,500? Again, I can go through similar templates. You can see that we are only really points away from these longer term simple moving averages. All right, not to mention, of course, just the natural sort of oversold readings that we are going to register. I mean, technically speaking, right now we've been in this correction, right, for about 1 month, which, I mean, it's rare. If you go back and think about the beginning of 2019, I mean, we haven't actually been in any real correction right through to the end of April, which was the first 4 months. And here we are, more or less, almost into the 4th week, or the 5th week, technically, in the month of May anyway, for the correction. So we'll see what happens. Either way, we're still not looking for this to turn into anything larger than that of a correction back down into critical support, upon which where traders are going to show up and again bid this market higher. But for the time being, I would encourage you to be patient, to be disciplined. And then what we're doing also on the side, and I haven't gone into this in detail whatsoever in this video, is that we are still stalking a bunch of individual trades in our top 12 list, whereby we are looking to jump on into them in the bullish direction once we see the trend continuation begin to show up on the index. First of all, what we need to do is close these open windows. Industrial average, you can see it's still open even though we pushed into it temporarily today. S&P 500, it's still open, just shy of 2,850. And on the Nasdaq, have a look, it's still there, 7,735. The first major warning that this market is turning will be the closure of that gap. All right, until that happens, the bears, technically speaking, still have control. All right, if you have any questions, please email me. If not, jump into that analysis class, that Pivot Point Pro class. The link is below. You can have a look at that analysis that we went through over the weekend. It was, I think, roughly 1 hour and 20 minutes of analysis. All right, that will do us as at Tuesday afternoon. Be interesting to see what happens as at tomorrow's session. A little surprised that we haven't seen the pop to close the window. However, again, a reminder of the whipsaw potential, right? Once novice traders see that, technically speaking, out of context, we have registered that of a lower low. Okay, so be mindful of that. Outside of that, everybody, it's James signing off on behalf of Pivot Point Trading. All the best. Goodbye.